So we are definitely back to peak insanity. In my opinion, I'm going to share a story with you today. I want to get your thoughts and comments about what Ford Motor Company is now offering to subprime borrowers, right? People that have terrible credit and have no business financing a Big Mac, let alone a $100,000 F-150. But it just goes to show you to what extent a lot of corporations will go to move product, even though they know they are basically sealing not only their fate with regard to what's going to happen with these vehicles, but the fate of these consumers who are also to blame for what I'm going to share with you. Before I jump into the story, I want to, as always, humbly ask if you would please hit that subscribe button for me so we can keep growing the community, and we are growing the channel, so thank you guys very much for that. So CNBC yesterday, Ford offers special financing to riskier F-150 buyers with lower credit scores. Detroit, Ford Motor is trying to boost sales of its crucial F-150 pickup truck before the end of the third quarter by offering special financing to consumers with less than perfect credit ratings. Right? Again, the spin, less than perfect. Perfect credit is 850. So that means 849 is less than perfect and basically impossible to achieve. Okay? The move includes offering, and obviously it's misleading because I'll explain it right now. The move includes offering consumers with subprime credit, those with FICO scores below 620, right? Far less than perfect. Lower interest rates. So they're offering, can you get your mind around this? I had a tough time even putting a thumbnail on today's show because I didn't even know it's like, to actually understand what they're doing here is insane. So those with FICO scores at 620 or below 620, right? They're offering lower interest rates. They're typically offered to those with quality scores. The automaker's Ford Credit financial arm confirmed on Wednesday. So Ford has decided in its infinite wisdom to reward those with the lowest credit scores in the country with beneficial, right, interest rates, better financing terms than they're offering to their prime borrower customers to try to move these Ford 150 trucks out the door they can't sell. I just quickly, F-150s, according to this article as well, start at $39,000 and they go to over $100,000 with all the upgrades. Okay? So you got people now under 620 credit scores, which means that their credit report's a mess. They've demonstrated irresponsible borrowing and repaying obligations in the past, and now they're going to be driving around $100,000 pickup trucks at more favorable terms than a couple or a guy or gal who has done all the right things, made all the right decisions, paid their bills on time, got their credit score into stellar shape. These people that are basically in this low tier category will actually be paying less for these vehicles, okay? Such promotions aren't unprecedented and are an effort to make vehicles more affordable for more buyers and increase inventory levels. More affordable, yes, for buyers that should not be allowed to and have no business getting involved in a finance transaction like this. But borrowers with lower credit scores are considered more likely, it says, to default or miss payments. No kidding, especially during an economic downturn. Well, we're in an economic downturn. I've been sharing with you for months and a couple of years now as it's been unfolding, how the debt levels of consumers are growing, how their credit scores are getting worse, how they're missing payments, especially in the auto finance industry, right? They're going 30, 60, 90 days late. Auto repossessions are up as well. Okay, so they're admitting here that borrowers with lower credit scores basically have demonstrated inability to repay their obligations. Okay, so we're going to give them a $100,000 loan for a truck. In addition to pickup trucks being crucial vehicles, it says, for the balance sheets of Detroit automakers such as Ford, their sales are closely watched as a sign of demand for skilled labor and small businesses. Okay, so does that mean that they're admitting they're going to try to artificially prop up the closely watched sign by putting these vehicles in the hands of people that simply can't afford them and have demonstrated a total inability to repay their obligations on time? I think that's what they're saying. A Ford Credit spokeswoman said the promotional rates do not factor into the organization's actual credit decisions for consumers. So that's another admission, the way I read it, right, that they're keeping this stuff off the books, right? The Wall Street Journal, which first reported the program, said Ford used a proprietary scoring model to assess a borrower's credit worthiness that goes beyond a FICO credit score. Okay, proprietary scoring model means, again, they're keeping it secret. Okay, now I will say this: are there people with 620 or lower credit scores that found themselves in an anomaly, a situation that they couldn't avoid, and it actually, other than some major thing that happened, they have demonstrated and can demonstrate ability to repay? I would say yes. I had a personal situation many, many years ago on a piece of property that caused my credit score for quite a long time to be very, very low. But my income levels were extremely high. Everything on my credit report was fantastic, other than this one thing that happened. And so, I, for example, would have been an outlier, okay? But that's not what we're talking about here. We're talking about just subprime borrowers in general that they're extending this special offer to move units. It says, we finance only customers we believe are credit worthy and have the capacity to repay. That's according to the Ford spokesperson. Well, number one, they're not credit worthy if they're under 620, and they've demonstrated the inability to repay, not the capacity to repay. Okay, so that's all just a bunch of hogwash. We have done these types of national programs in the past, extending a promotional rate to customers who meet our credit criteria. The secret, right, proprietary credit criteria. Ford Credit said in an emailed statement to CNBC. The average new loan rate was about 9% as of the most recent July data, according to Cox Automotive's Dealer Track. That includes rates of around 18 to 20% for subprime or deep subprime consumers. Ford Credit reports only, it says, 3% to 4% of its credit arms financing since 2024, have been to, let me repeat this. Ford Credit reports only 3 to 4% of its credit arms financing since 2024 have been to higher risk consumers. They're admitting here that they normally only will finance under 5% of high risk borrowers, right? But now they're rolling out this new promotional special financing to people that they know have no business to buying these vehicles and have no ability, for the most part, not shown any proper track record of repaying the debt. Right? The average FICO score for Ford Credit's customers was 748 through the first half of the year. Okay, that is a lot different than sub 620. Sales of F-150, and here's what's going on. Okay, this is why they're doing it. Bottom line, folks, it's profit, profit, profit at whatever cost. Okay. Sales of Ford F-Series trucks, which include the F-150, were up 12.7% for the year entering September. However, we're down 3.4% for the month in August compared with a year earlier. Okay? And it talks about pricing for the F-150 ranges from $39,000 to more than $100,000, depending on the model and options. So they're not selling these trucks like they were a year ago, and so they've decided to basically allow subprime consumers to straddle themselves with more debt that they simply are going to default on, okay? Unless they're an outlier, like I talked about a second ago, an anomaly, an outlier. This is the category of people that should not be given special financing, or really any financing, especially for something at this price point, okay? And what's going to happen? You're going to see a flood of these defaults. Ford's going to move these units off the books. You're going to see an article out in a few months saying, wow, the sales of F-150 trucks is great, and the numbers are strong. And then in 6 months or 9 months, you're going to see a flood of these vehicles that are repossessed, and back on, used car lots, right? Ford isn't the only, and here's interesting. Ford isn't the only automaker offering deals on its pickup trucks, said Stellantis. Stellantis's Ram Trucks brand is currently offering 0% financing for well-qualified buyers on select vehicles, and its lineup according to its website. Okay, that's for well-qualified buyers. That's not a similar, it's comparing apples and oranges. General Motors, Chevrolet, and GMC brands are also offering low interest rate financing as little as 0% for well-qualified buyers through the end of this month when financed with its financial arm, according to their websites. Again, well-qualified buyers, totally different than what Ford is doing. All right? So a little bit of a rant on that point, but it's a head scratcher. It just means that this thing is, it's a done deal. The collapse is a done deal. All right. When you see this kind of stuff happening, I'll close real quickly. Carmax today. Carmax shares crashed. It says the most since the dot-com bust. And when the story was out of Zero Hedge this morning, Carmax shares were down 25%. I checked. They closed down about 20% today. I don't know where that stands in terms of, their let's say their track record since since the dot-com bubble, I guess early 2000s. But it says that what happened was the sell-off was sparked by their second quarter earnings that Truist Financial Services analysts described as a miss across the board. Really nothing good to see. Second quarter results from CarMax shocked Wall Street desks. Earnings miss, used car sale weakness. The CEO, William D. Nash, described the quarter as challenging and announced a $150 million cost-cutting plan over 18 months. The market's reaction, it says, to the results has so far been Armageddon. All right? So CarMax, and this also sent Carvana shares down. We know what happened with the subprime auto lender a couple weeks ago that we shared on a video. So this is all heading in the wrong direction. I was going to title the thumbnail, the wheels are coming off, but I thought it was actually too much tongue-in-cheek because this is not a laughing matter. And when you have companies as big as Ford, just say complicit, if you will, in the collapse of these people, these consumers that are going to find themselves just digging the hole deeper and deeper. All right, so I don't want to ramble too long today. If you guys enjoy the content, leave me a like on the video, subscribe to the channel if you haven't subscribed yet. Leave your thoughts and comments on this, folks. We're going, in the wrong direction. All right, and with that being said, I'll talk to y'all soon. Bye.